See, I'll crack on with the euro. I think that's probably pretty much a favourite pair. So weekly chart for the euro. Let's crack on with that one. Okay, I can't remember when I did the last webinar, but we've been hovering around this 61% of margin retracement level for quite a long time now. This is a weekly chart going back to July 2012, as you can see. Something of a double top going on here. This is obviously this big resistance on a weekly chart, the 61.8% of margin retracement level, which is at 138.33. Now, it's really been doing its job lately. Several weeks we've topped out just below there, I'm seeing 138.10, 20. A couple of weeks ago, we managed to just poke through and got as high as 138.90, but you can see we never managed to close anywhere near that level. We spiked through, and on that week we closed significantly lower, bang in line with the other 3 weeks. So until we close above there, the outlook, as far as I'm concerned, from euro versus the US dollar is going to start turning negative. You can see the weekly stochastics. There's a little bit of divergence there. We've got the double top at the strong fib level, fib resistance level. Stochastics are starting to turn negative on the weekly chart. So weekly chart, I can't see anything positive, and if you've been following me, you pretty much know that's what I've been saying for a while. Only thing that will change that is if we start to close above 138.33 on the weekly charts. What's the daily chart telling us? Well, that spiked higher and it wasn't actually a lower close. You can't call that a reversal, but it wasn't particularly positive. This is a daily chart of the euro. We've got this little triangle formation. Once we broke it, we came down quite significantly. I thought we would probably go a little bit lower. Yesterday I was looking for that 135. I was looking to test this trend line. So slightly lower than we actually got. The low was 135.71. I thought we could get a bit close to the 135.5 area. I think 135.60.40 was my target, because we've also got the 100-day moving average there. So I was prepared to see a little spike through that trend line to test the 100-day moving average, and then I was looking for a bounce from there. Well, we haven't had that yet. Yesterday we only got as low as 135.70 and rallied a little bit early, so I didn't get my chance to get long there. Getting oversold on the daily stochastics now, so at the moment, although the weekly chart doesn't look that good on the daily chart, all you can say at the moment is we've been in a nice strong bull trend since July of last year, so at least 6 months in this nice bull trend, and it's stick with the trend. So 6-month bull trend, stick with it. So I am looking to buy down at this trend line if I can, around the 135.5 area. And it gives me more confidence when I see that 100-day moving average as well. That markets do like to bounce off there. You can see that 100-day moving average is held quite nicely. It's tested here in September, and again here in November, where we spiked below on a daily basis. We never managed to close below it. So who knows? Maybe yesterday was the low for that correction, and maybe we will now head higher. I mean, with the stochastics narrowing and they're going to start turning up, maybe that was the chance yesterday to buy it. And I have to admit, I missed it. I am hoping that we get one last stab at it, at least come back down and retest 135.70, even if we don't get as far as 135.40. But just be on the lookout for a buying opportunity here, I guess, is all I can summarise that with. 4-hour chart, what's that telling us? We've had a decent bounce, and that's allowed an oversold situation to unwind. You can see possibly why we did find decent support there, just above the trend line yesterday, because we did get so oversold. MACDs also turned positive, so that's managed to allow us to push higher. I'm hoping, as I say, we just pull back one more time and give us a last opportunity to get long this pair. And then who knows? Maybe we'll whether we get as far as this weekly 138.33 again. I'm not 100% sure. I've got no idea. We'll have to just see how it works. I am expecting a bounce, obviously, if we come off. But we're going to have to tackle this trend line first. This is at 137.20. So that 137.20, 137.50 area is where we're going to struggle. And that will give us an idea of what will happen going forward from that point. But just looking further ahead, if we do get through to the 137.75 area, then there is a chance we'll be back up around there. But too far into, we just need to be able to judge that. Just bear in mind, longer-term level, 138.73 is really quite crucial now. And it's really only a close above there that I can feel positive. Not really much else I can say about the euro on that score, unless you've got any questions for me. Obviously, a close below the 100-day moving average at 135.40 is going to be a problem. We've got a little bit of a trend line here, slightly shorter term trend line at 134.85 area. We've also got some fib support here at 134.58. So there's quite a few little levels on the way down. We get through 134.50 and it's good night for this pair to at least the 200-day moving average. I would imagine that little area down there will be quite a quick move if we do get through 134.5 and we see 133.25 quite quickly. But again, I'm getting a bit ahead of myself there. We'll have to see what happens this week. Any of those sort of moves wouldn't be for another week or two, I should imagine. Okay, that's it from Euro, I think. Cable, how does it relate to dollar index? I don't follow the dollar index. I haven't looked at it for a long time. If I've got time, I'll try and have a look at it if you like, but I have to be honest, not something I'm following, so I'm not going to try and guess. Cable, also looking a little bit toppy for different reasons on the weekly chart. So, let's smash this right. You can see that we had a big sell-off, as we all remember, from 2008 down to 2009. And since then, in effect, on the weekly chart, we've gone nowhere. You can really see that as I open this up. We are just going completely sideways on the weekly chart. There's no trend at all. So if we're looking for trends, we've got to go a lot shorter term. But this is what I think is important as I open up this weekly chart. You can see more recently through 2012, 2013, so over the last 2 years, we've got this sort of broadening situation. With the trend line, this upper trend line goes back to April 2012, so, coming off a 2-year-old trend like this. So it is important. Lots of people are paying attention to it, and you can see we've had a really good go at it over the last couple of weeks. We've really had a stab to get through it. There's also some Fibonacci resistance here, but that isn't having too much of an effect. But this trend line certainly is. You can see the 2 spikes higher over the last 2 weeks. Again, haven't managed to close above this significant level, just the same as we were unable to in the euro. Last week's candle was much more negative with a higher spike. That's the highest we've managed to reach. We got to 166.03, but we closed below the previous week's close, so a little bit of a reversal going on there. 2 spikes higher. I think they call that a tweezers or something, but all I know is that when you spike higher and you close lower, it's not very positive, especially when you're hitting some sort of significant trend line, Fibonacci, whatever resistance that it might be. So I'm starting to feel more negative about this pair now. We are quite overbought on the weekly chart as well. MACD, not looking, well, it's quite positive, but it won't take much for that to turn lower over the next week or two. So I think the risk for cable is now of at least some profit taking. I mean, we've had a really good run up in the last 6 months. We're overbought. I would imagine some people are thinking about taking some chips off the table there. I've said it before, and we certainly haven't managed to push any higher over the last 2 weeks since my last webinars when I was warning of lower prices. Having said that, we haven't come significantly lower either. But we do seem to be running out of steam. Okay, so we go to the daily chart. What's that showing? This again, 6 month rally that we've seen, similar to the euro situation. A really nice clear uptrend. I mean, perfect. We had a little pause here around autumn, and then we pushed on again. So the trend line's clearly define what's going on here. We're in a nice uptrend. This trend line, again, I was looking for this to be tested yesterday around the low 163 area. We only got as far as 163.38, so not quite as far as I was hoping. I was sort of warning my clients that we should be trying to buy around there. We didn't actually get the chance. It just didn't give us that extra few pips that we were looking for in order to get long. Again, just like the euro, at this stage, this is just a correction of a 6-month bull run, and there's no reason to get massively bearish just yet. I know the weekly chart doesn't look that positive, but we need to look at shorter-term charts for timing and to see when we can start to get more aggressively short on this pair. And at the moment, there's no reason to get aggressively short. So weekly chart's telling us to look out for sell signals. Daily chart is telling us stick with the bull trend, but beware that, what I'm guessing the most likely scenario is we'll now have a little bit of an upturn off this trend line and we'll retest these highs and we'll reject them in a double top. And then that would be more of a sell signal. Note this candle here from the 2nd of January. if anyone was trading on the first day of the year, that was quite a hectic day when we managed to make a new high of 166.03, and we then took out at least 3 days worth of gains, and we certainly took out almost 4. So that, yeah, that's a key reversal. That is a big warning shot across the bows, so we've got to be very careful, and that does stack up with the weekly chart as well. So, week to week, starting to look negative, day to day, a bit more positive. We could see a rally into the end of the week. I'm hoping that we get a chance to buy this down around the low 163 area, so I do think short term that would be a decent trade running into the end of the week. You know, the stochastics have just unwound what was a very overbought situation, so there is room now for it to turn higher. 4-hour chart, a slightly shorter term trend line. This goes back to the middle of November, yeah. So yeah, this is the one to watch on the short term. We've got some little shorts going on, myself and my clients at the moment today. We sold into that trend line, and at the moment I'm quite happy with that. We're slightly on the side, and I'm sticking with that. I'm hoping to see that this is just eased the oversold conditions, and I'm hoping this trend line will hold, and then I'm hoping we dip back. Well, I'd like to see it today down to the sort of 163.70 area. That would be good enough for a short-term profit for my clients, some of whom I can see have tuned in and following me right now. So if we do see it back down there, I'll be happy enough with that sort of high 163 area, because there's not really much going on today. We may not even get that far low, it's so quiet. Okay, so that's my reason. We've also got some big resistance going on here around the 164.24 area. I know we blipped through there and got as far as 164.38, but that tied in with the trend line is tough though. It's proving to be tough resistance, as you would expect it to be. And so in the very short term, into the end of the day and maybe into tomorrow, I'm looking for a bit of a sell-off, and I'm hoping that will provide us with that buying opportunity down in the low 163 area. What else can I say about that? Not really a great deal. But any rally could well target that 166 double arrow area, and I would be very careful of a double top. It's only a little double top, it's not a big one, but would certainly push us down to at least the 160-180 area. And what have we got here? Actually, and then that is the rally. Okay, yeah, so I mean, we would be looking at the 160-180 area as a minimum target on that double top. We'd have to break this trend line at 160 in the low 163 just to confirm that. I think that's all I can say about cable. I'm just seeing oil come off here, which I'm going to show you my thinking on oil. You see there is something quite significant going on. You can see this in the weekly chart. Okay, so WTI US crude. Where do we need to look at this from? 2010. You can see what's been going on here. Range has been getting fairly narrow. And if I just move this out, the most important thing that I can see in oil at the moment is, well, we've had this big sell-off last week. And you can see why. We got very close to this trend line. It's quite a long-term trend line. That's, what are we looking at? Mid-2011 is that one? May 2011. So yeah, that's getting on for almost a 3-year trend line. So as soon as we got anywhere near that, sellers came in, took oil back down again through the 100-week moving average. But we're now finding very good trend line support here. You can see where these two intersect. This is almost exactly around the 93.30, 93.20 area. Yesterday was 93.20 was the low. I had 93.30 as my buy level, and we managed to get long there. And I am looking for a decent bounce just off here. I know the weekly chart doesn't look particularly positive, but we're not in any significant trend, so I'm not too worried about what stochastics say or MACD says. I'm more concerned about the fact that we've got some really good trend line support here where we intersect. You can see, here we go, this week of the 25th of November. Now, if you remember way back then, following me and my webinars, you'll remember that I was getting very, very excited about this level. We had 200-week moving average, we had long-term trend line support, and I was really raving about that. I did videos and all sorts, advising my clients to jump in there, and that did work really, really well. In fact, we probably went a little bit further than I would have even expected in that rally, but it was a good strong bounce off. So I'm wondering, will we get the same thing again now that we've retested that trend line? Will those same buyers that pushed it up come back in at this level? And yeah, I know WTI just dipped in 93.43. So we've got to watch 93.20. That was yesterday's low, but this might be that second buying opportunity that I was talking about this morning to my clients. You know, the thing is, this is quite a wide band of support because even down at the 200 week moving average is 92.44. So there's really a whole 100-point area of support for oil, and it's really only below 92.44 that you're going to have to start worrying about this market coming off. That's the daily chart. It just shows you what I'm saying, probably slightly more clearly. The daily stochastics are getting very oversold, so that does also give me some encouragement that the theory is right. You know, we do really need to unwind this oversold situation, and it wouldn't take much at all for these stochastics to start turning bullish, and we could then start to rocket higher. That's it really. 94, 98 would be our first target for the bounce. We haven't managed to get that far today. As you say, we've just sold off again. We seem to be retesting it. I'd really like to see a double bottom there at 93.20. I'd like to see that hold an end, and that would propel us higher. 4-hour stochastics are also looking pretty positive. MACD's turned, and that's starting to look positive. So, you know, I'm hopeful that that theory will work and that we will rally off there. Now, that gas I'm going to just flip to because I was looking there for a head and shoulders pattern to form. This 4-hour chart has a head and shoulders pattern going on here. Well, I think it has, although we are starting to spring high, so that may now be negated. You can see we've got shoulder, head, shoulder. I mean, the left shoulder is at 44.43, the high. So we start going through 44.43, and we're going to have to give up the idea that natural gas is forming a bearish head and shoulders pattern. But you can see it quite clearly. This is a 4-hour chart, so it's relatively short term, but you can see that, can't you? Right shoulder, head, left shoulder. The only way that this is going to be blown apart is if we start to break above 94.40, 94.50, and then that will negate this pattern. We were quite overbought in the daily stochastic, and so I was thinking that this could form. You can even see it on the daily chart. You can see it quite clearly. I've opened up the head, shoulder, head pattern. Weekly chart, what's that saying to us? Not a great deal. Overbought, but that's never enough reason to sell. Although this weekly candle's a little bit negative because we did poke higher and close lower. But it's just one to watch in natural gas. I'm actually sure natural gas is going against me. It's rallied a little bit further than I'd expected. But I'm going to hold that short because I do think that there is potential for this double top and hang on, something up. And it's a longer term play, so you've got to give it a bit of leeway. You know, it's not a very specific entry and exit point, so you've got to give it some leeway and let it ride, and perhaps see a bit of loss on that one before you can take a profit. Okay, just thought that was worth mentioning. But watch natural gas. That does look like quite an interesting formation. What we really need to see, if we are short, is a break below the neckline, which comes in around the 42.20 area, 42.15 area. That also ties in with these lows. So you start getting through 42.00, and that should confirm that it is a head and shoulders pattern. And I think we could quite quickly see a sell-off down to the 4,039.95 area. Here we are, down here. So there's a bit of trend line support there as well, so that will probably actually be quite a good buying opportunity if we fell that far, but getting ahead of myself a little bit on that one as well. Keep an eye on it. Okay, what am I looking at now? Natural gas. As I say, if you've got anything if you want me to look at anything, just give me a shout, but I'll try and stick with Forex and look at the dollar yen. Okay, so weekly chart dollar yen, obviously a whopping great rally in the first half of 2013. Then we went sideways and we had this triangular continuation pattern. Once we broke out, it was all pretty textbook. We broke out, we retested it, and we just took off from 1, 2, 3, 4, 5, 6, 7 weeks of gains. Very nice. The 8th week looking slightly less positive, a new high but a lower close, and that's pretty much made it look like we're running out of steam, at least for the time being. Not necessarily going to get massively negative about this. It's not really doing anything that says that's a screaming sell. So let me see if I've got any fibs here that make any sense. Oh yes, we do have some fibs here that make a lot of sense. Okay, I thought there was something along there. So you can see that just going back to the last big shakeout, which was that 2008, 2009, 2007, 2009, sorry, 2007 was when we started to collapse, and we sold up all the way down through to the end of 2011, and then we had this enormous rally. Now we've managed to retrace 61.8%. I think you're probably aware that's a pretty big fib retracement level. So that is actually a very good reason why we came to a grinding halt here at 105.44. That's only 15 pips off that Fibonacci resistance. So you can see someone somewhere thinking to themselves, that is enough, I'm going to take my longs off the table, and we've come to a grinding halt. We are overbought, so yeah, there is a significant chance of at least some profit taking now. Daily chart doesn't say an awful lot. We've got a very short-term trend line going back to early November. Here we see it, the black line. We broke below it yesterday. Well, actually, we broke below it the day before. We spiked up. Yesterday, we couldn't hold it. We collapsed through it. So this is the first time we've broke below that trend line now for almost 2 months, or exactly 2 months in fact. So yeah, this is another added negative, really. Daily stochastics are certainly not very positive. Weekly chart doesn't look particularly good either. We're sitting below that trend line. Chances are we're going to see it down at 103.45 area at some stage. That would be pretty good support short term, so I would imagine we'll see a decent bounce off there, but doesn't look very positive right now as we speak, and possibly any rally is a selling opportunity. We should stick a trend line on there. Hang on, can I get a trend line? Yep, there we go. So you can see we're just sort of starting to do this kind of thing here. Watch these trend lines. What's this? The 4-hour chart? Yeah, 4-hour chart. So we've got some resistance around the 104.5 area from this trend line, and the 104.66 fib level as well. So it's really only close. Well, it's really only a decent push through 104.65.70 that would start to look more positive. Otherwise, I think we can come back off down to 104.15, 103.80, and eventually 103.40. But that's a good short-term fib support level. It's a good daily, where are we? Good daily fib support level, and I think that would just be enough for the time being. Who knows, we might rally off there, get a double top, and then be looking at a much more significant sell-off end of the month, beginning of next month. We'll have to have a look at that in the next webinar. On the subject of 100 and 200 day moving averages, they vary according to broker and platform. That's absolutely correct. There's a platform, there's all sorts of different moving averages. There's weighted moving averages and exponential moving averages and all sorts. I'm pretty boring. I just use simple moving averages. There is a difference, but they do tend to throw out different prices depending on which one you use. I just use a simple. Seems to work for me. I haven't studied moving averages in any great detail, so I can't really give you an expert opinion on what does what and why. I just like to keep it simple, and therefore I use a simple moving average. And I use 21, 55, 100 and 200. I don't pay much attention to 21 at all. 55 I pay a little bit more attention to. 100 and 200, whether it's weekly or daily, I do pay a lot of attention to, or even monthly for that matter, because for some reason they do seem to work quite well as support and resistance levels. If you play with them on your own chart, you'll see that. Having said that, I mean, look, this is a good example. This is 55-week moving average, and that's really worked quite well as resistance on many different occasions, and support, in fact. So they do work, these things, as support and resistance levels. A lot of people put faith in moving average crossovers. I don't so much, although this one worked pretty nicely. Yeah, moving average crossover. I mean, this one you've crossed over as you're heading higher, and that's a bullish confirmation. Well, certainly worked there. I don't pay as much attention to them. Maybe I should pay more attention to them, but I use them more as support and resistance. Moving averages. Okay, where are we now? What was that? Have I noted those GBP monthly 200 moving average? Sorry, cable and GBP JPY both at 200 moving and possible forward GBP. Let's have a look. Let's just have a go back to that one. That's a really good point. They're at 200-day moving averages or 200-month moving averages. Let's say 200-day moving averages. You're talking about monthly chart, are you? Let me just have a look. Monthly, you are indeed. Okay, that's a really interesting point. Actually, I'm glad you pointed that out to me. Wow, yeah, you're absolutely right. Okay, that's brilliant. Very well worth noting. Cable 200 month moving averages at 166.34, so that is very significant indeed. Yeah, thanks for that. The high is 166.03, so that adds to the resistance area, and I do think that is very important, and I hadn't noticed it myself, so I'm very grateful to you for pointing that out to me. Yeah, it just adds to the picture, doesn't it? You know, we're tackling trend lines and tackling Fibonacci, and now we're also tackling 200 month moving average. I do think that is important, and that does lend weight to my idea that we're going to top out. So really, I would certainly say we're going to have to get through that 166.34 200 month moving average before we can start to feel positive about cable. Brilliant. Thanks very much for that. That's very useful indeed. Very helpful. Okay. So that's cable, euro and yen. We've done oil. We've done that gas, gold. Let's do gold. Okay, just shows you how you have to go over the longer term charts and just show you how I haven't done that there. I haven't looked at the monthly chart for a long time. So, yeah, it is important. Well done, that's brilliant. Okay, gold. Gold is massively interesting. We've been in a 2-year bear market, something like that. As you know, every single webinar I say, gold is in the downtrend, gold is going lower, don't fight the trend. There's so many people out there who are bullish with gold, it's just ridiculous. They come on CNBC and do all this gold's going up rubbish. Well, you know, the charts don't lie. Stick with the trend, down we go. Even this little rally, July to September, didn't catch us out, it didn't fall us. It was just a bear market rally. Let me just try and show you what we were thinking there. You know. It was pretty textbook. Oops, that didn't work, did it? There we go. It was pretty textbook. It was just a bear market rally. We got ridiculously oversold all over the place, weekly, daily, everything else. I remember at the time, and I've said it over and over again, I don't really know why 1180 held up. I couldn't find a particularly good reason, although I'll show you one possible reason. Anyway, we rallied up. We held, we struggled at the first 25% fib, then we carried on to the 38.2. As long as that holds, that means you're still in a bear market. And indeed, we did come lower, and we've downtrended ever since then from September. Now, there is something important going on here in gold. And for the first time in a long time, I am now starting to think that gold is going to bottom out. It's very simple. We've got a double bottom. 1180 was the low on the 28th of June 2013, 1182.5, or was the low on the 31st of December. We do have what potentially looks like a double bottom. We are in a multi-year bull market, and this is really just a correction to the bull market. Don't forget, although it has been a 2-year bear market. So you've always got to look at the longer term picture. In fact, I'm going to flip that monthly chart just to make it easier, just in case I've missed out on the moving average. Okay. So, now, where do we take this from? There we go. Actually, I will take it from there. Okay, so this isn't the absolute low for gold, but you can see that we started to take off from there. We had a big down month in April 2004, and since then it pretty much just started to accelerate on the upside. That was, I would say, when we really started to take off from 371.60. So I've taken that as a level. We had decent 50% Fibonacci support around 1146. Now I know that's a good 35 points away from what is the low. But, you know, on the grand scale of things, it's not a huge amount when you come down from 1920 all the way to 1180, and you have pretty much come off 50% of that rally from what was this year, 2004. So, you know, you've got to have some level of margin, have some margin of error. Right, so the big point here is, let's throw a trend line on here. No, nowhere near it. The point here is that gold is still in a multi-year bull market. We've been going up since what, 2000? What was the low? I think that was the low, 253 or something. So we've been going up from the end of the last millennium. In fact, we've had a really good rally all the way up. When did we top out? 2011. So it was a good 11-12 year rally. Silver, yeah, I'll have a look at silver in a minute. Actually, I'm glad you brought that up. So it's quite important. Monthly chart wise, look, we're getting very oversold. We have got a double bottom. We've also got pretty good support down here at 11.10 from the 100-month moving average and a trend line. Doesn't look like we're going to get that far. Anyway, basically, I'm getting quite optimistic now for the first time ever, or in a long time, in gold. Double bottom really is telling me there's something going on here. We've got very oversold. We've had a really good rally. So this is the way to play it, I think. 11.80.85, I called a low and I said, jump in. This could be the best buying opportunity in gold for the last 2 years. Well, that did prove to be right, so I'm very happy with that call. What happened next is we've had a really good run up. We got as far as 12.48 yesterday. You can see that I had Fibonacci resistance 12.51, 12.54. Now, we didn't actually manage to get to that far. I'm not saying we won't. We could still do it before the week's out. But I think that will cap it. So either we've already seen it or we might just have a go at that low 12.50 area. I think that will cap it. I mean, we're getting overbought on the daily chart anyway, so it's a really decent bounce back. No bull market is going to resume in a straight line. You're going to have some jumping around, and the more you jump around here, the more of a base you'll build. So let's just see what happens there. Maybe we'll get to that 12.50 area. Maybe we'll then dip back to around what's these lows, 12.11, and then this could actually form an inverse head and shoulders pattern. Can you see that? You can see how this could be a left shoulder, or this could be a head, and then we could just start to form a right shoulder. So it could take quite a long time. This is what, half a month? Yeah, this is half a month. Well, actually, this shoulder's almost a month, really. So who knows? Maybe it could be a month where we just mess around here, build a right shoulder, and then we take off. So this isn't something that's going to happen overnight, but it's quite important. And if we did just manage to blip up to the to the low to mid 12.50s, that would just help that look a little bit more symmetrical, wouldn't it? If we just got up here, came down, built a shoulder, and then started to burst higher. So just watch that. Very, very early days, and I'm speculating there. I'm guessing what might happen, which is not much good to anyone really, but I'm just saying look out for it. Or we could come back and retest this level and bounce off again. I don't know. But I just think that we're very oversold. I think this is a really good double bottom. I think we are bottoming out just above what is a really important support in gold. And, you cannot forget that we are in a multi-year bull market, and sooner or later that bull market will resume. And as you know, if you followed me, this is the first time I've ever said anything bullish about gold, because I have just said stick with the bear trend for the last 2 years, and it has been the right thing to do. Okay, so where are we? On your chart, silver double bottom. Yeah, silver. Okay, let's have a look at silver. It's all correlating. What does it break through? Yeah, absolutely right. Then that negates the double bottom. So it's quite a low risk trade, as I was saying to my clients last week. It's really low risk to buy it in the low 11.80s. Your stop was at 11.70, and already that trade's worked really nicely. We've had more than 50 points out of it for a 15-point loss. So it makes it 3-to-1. Well, it's more like a 4-to-1 risk reward ratio. The trade's worked brilliantly. I'm really happy with that at the moment. But you're right, Ray. If we sell off back to the low 1200s, again, it's probably worth buying it, looking for that inverse head and shoulders, because you're stopping out below 1180. It's a relatively small stop, say 25 points, for the potential to make, well, much more than 50. So it's a better than 2-to-1 risk reward ratio. Silver again doing something similar. Yes, it certainly is. Again, another double bottom. We'll throw some grids on here. This is a monthly chart. Actually, I'll tell you from there. Okay, so again, we've bottomed out above a decent a decent fib support, well, quite a big way above that 100 pips or something. So, but again, getting oversold on stochastics. MACD is looking like it's got the potential to turn higher on this monthly chart. Just over to the weekly chart. Yesterday we had a good test low and then rocked it high. Oh yeah, we had that funny move in gold and silver yesterday, didn't we? I think that was someone with a fat finger. Someone did something wrong and took out a load of stops. I don't think that was a natural move. So yeah, anyway, we have got something of a double bottom again in silver. In fact, yesterday's move helps to confirm that. Oversold on the weekly chart, looking much more positive for silver. And again, as you say, there is a good chance. So bottomed off 200 months moving average, did it? Let me look at that again. 200 months moving average. Why don't I have that? For some reason, I don't seem to have that, but I'll take your word for it. I'm sure you're right, 200 months moving average. For some reason, mine's only showing the 100 and the 21 and the 55 month moving average. It's probably because there's not enough data going back on my chart. Okay, well, anyway, yeah, I would agree with you. I am starting to feel more positive about that, and I won't change my mind unless we break the lows. So it's a fairly simple strategy. Buy it unless we break the lows. In gold, it's 1180. In silver, it's 1823. Pretty simple. But there is every reason to look for a rally. Okay, so I've been asked for euro versus the yen. No, there was one before that, wasn't there? Was it GBP, JPY, I think it was? I think it was. Let me have a look at it. GBP, JPY, dash effects. Okay, pound versus yen. I do get asked this quite a bit actually, so there must be some people out there trading it. Blimey, running out of time already. Right, I'll talk faster and we'll have a look at this. Okay, so monthly chart. Do you know what? I'm really glad you told me about these. To look at the monthly chart because I don't look at it enough. And look at this. Yeah, this is quite interesting. Yeah, pound versus the yen. 178.75 is a 200 month moving average. We haven't really got that close to it. We've got to 174.85. Okay, on the grand scale of things, not a million miles away. Getting overdone. Fib-wise. Do like to keep an eye on the fibs. Actually, not a great deal. We've managed to get through 116.15 very nicely, and that's that good support. And that, okay, that is going to be very nice support on the way down. We've got 100 months moving average as well. Yeah, that's all I can see for that. Let's go to the weekly chart. What's that telling me? Okay, so weekly chart's got very overbought. Not really surprised. We've got a bit of a negative candle last week, but we're not quite hitting the same sort of resistance that we are on the dollar yen. So it's not quite as negative looking. But I'll certainly be cautious. Very overdone. We may, this candle here does indicate we've probably run out of steam. Excuse me. We've come lower on the daily chart. Let me see. We need to throw some trend lines on here. We do. Yeah. Okay. So yeah, similar sort of picture to the dollar yen, where we are breaking lower. We've closed below the trend line now, so there is a negative. I'm not going to get massively negative just yet, just as I'm not going to get massively negative on the dollar yen. But I definitely think we've got to keep an eye out for some sell signals on this. So let's just watch this. We'll probably come a bit lower. Okay. We've got some good support around 170 and a half, but it is looking like we could head a bit lower in this. I'm not going to dwell on this one for too long. Just be careful. Could go a bit lower. Not going to get massively bearish yet, but let's keep our eyes peeled for some sell signals on that one. Aussie. We have to skim through, so I'm running out of time. Aussie. Okay. This is interesting. Gold and silver, well, fundamentals I'm absolutely hopeless, as you all know. And absolutely, I don't follow them. All I used to do is read the news, and now all I do is follow charts, and I ignore the news. My theory is that price discounts everything. So now Aussie, I do understand is a commodity currency, and this is kind of looking very similar to the gold silver picture, which is quite nice because it backs up my theory on the gold and silver. In fact, as we're big monthly chart fans today, let's have a look at the monthly chart for the euro dollar. Okay, so we're hovering around 100 month moving average support. Yes, we're dipping a little bit below it, but we are hanging on to it quite nicely. So that is at 8960. So, you know, a close above 8960 would be very, very helpful indeed. We are getting oversold. We're getting a little bit of divergence on the monthly chart and stochastics. So that's, you know, fairly, you know, if you're looking for positive signals, you've got some there. But we've definitely got a big double bottom here. We've got 88.48 is the low on May 2013. We've got 88.21, so we managed to just tick below it on a weekly basis, but we certainly didn't manage to close below it. We bounced up nicely 2 or 3 weeks ago. Last week we also tried it again, but we didn't even manage to go down as far. So look, this to me looks like a nice little double bottom. Again, just like gold and silver, we've been heading sideways and then low for quite a long time. Last week's candle was bullish. We are ridiculously oversold on the weekly chart. All this is pointing to me to the fact that this has also got a very good chance of a rally. Daily chart, what's that telling me? Well, we've already had a decent recovery, not as good as you would have hoped, really, bearing in mind how oversold we are. So just watch this space. Maybe we need to come down, retest 82.21 and see it rally off there. But you can see how the bigger picture does look quite positive. It does tie in with gold and silver. And again, these are all relatively low risk trades because if we do get a good rally, it's gonna go on for a few weeks when it finally picks up. But you've got a very short stop below previous lows of 88.20. So risk reward wise, it's got to be worth a go, I think. Do we have any other sort of pattern on the daily chart? No, nothing really, any sort of inverted head and shoulders or anything to say on that. But, you know, we've spent a lot of time down here. This is a bit of a rounding bottom, you know, maybe that's what we're going to just see. This is rounding pattern where we just gradually take off and head higher. So yeah, every reason to look for stronger Aussie dollar. GBP Aussie. I think I've got time, have I? Yeah, 22. GBP Aussie. God, I don't think I've ever looked at that before. AUDAO. Let's have a look at that one. Oh, just looking at that gas, we have managed to hold. Yeah, we have managed to so far to hold below 44.40 or whatever I said it was. Where's the high? 44.40 in fact. So, you know, that head and shoulders is still intact. Keep an eye on that. I really think that could be quite interesting in that gas. Right, pound versus Aussie. Pound versus Aussie. Wow, quite interesting. Pound versus Aussie. Okay, so monthly chart. Wow, look at those moving averages. Okay, 92.40, 92, 192.40, 193, 68. So that's massive resistance there, but we're miles away from it, so it's not particularly relevant. Quite overbought on the stochastics monthly chart, but it's not really saying anything else. There's no previous monthly highs, lows. There's nothing there. Okay, so we go on to the weekly chart. Last week's candle, not really a surprise after what we've seen on the other currencies, but yeah, last week's candle is quite negative. First negative candle we've seen for a very long time since this one, which was the end of September. So new high, lower close, shows at least indecision in the market and some when we're running out of steam. Well, not really surprised. We're very overbought, I guess, although we're not really hitting any major resistances I can see. So we've got a warning that we're running out of steam. That's all I can say at the moment. Look at these moving averages. That's quite interesting there. If you were just looking, well, blimey, this moving average crossover did work nicely. 55 week moving average crossing over 200 week moving average, and that really buy signal did work quite nicely. Maybe I should pay more attention to those. We've got 100 weeks about to cross over the 200 week moving average, so who knows? Maybe we've got a lot further to go, but I'm not going to worry about that too much at the moment. It's a longer term play there. Listen, oil. Remember what I said about 93.40, 93.30, 93.20? I think we just bottomed out in 93.30 area, and we're starting to head higher again. So, that's a double bottom potential, and I really think that oil could start to head higher, and that might be the last chance to get in. I hope if my clients have joined me, they're paying attention, because I've been banging on about that one yesterday and today. And that might have been the last chance to jump in on that one for a little while. Pound Aussie. Oh, incidentally, by the way, I do run a live trading group every day, all day, on Twitter, where you follow my trades. So I do this sort of thing that I'm doing for you now, all day, every day, at entry levels. I give you stops, targets. I nurse you through every trade. And I make sure you're disciplined, you're patient, and you do all the right things. And you basically just follow me. It works really well. We've got 25 or 30 people on the group. Everyone seems to be happy. Everyone's making money every day. So if you're interested, just let me know or go to my website or email me. But there is room for just a few more people. But it does work extremely well. And you go to my Twitter and you'll just see all the positive comments from it. Right. That's a quick plug for my service. GBP Aussie. Okay, so we're in this very nice uptrend, which goes back to April of last year. What can we say? Daily chart. In fact, I've got a few people from the group on this webinar today, so hopefully you can tell everyone how wonderfully happy you are with live trading with me. Right, okay, so I'm breaking this down now just for the last month. We've broken lower. That trend line worked really well. The day before yesterday, we broke lower. We resisted the trend line. We came down. At the moment, we're just wrap up in 3 minutes. Okay, at the moment, we're just unwinding. Yeah, there's nothing to get massively bearish about. We're running out of steam. Fair enough. We're overbought. We've got very overbought on daily chart as well. We've come lower. We're well within that uptrend channel. It all looks pretty positive. If we continue lower, where can we go? Oh, well, look at that. The fibs have worked perfectly. They usually do. 182.13 was very good support. 182.30 was below, so we bounced, 15 pips or something above that. So it's starting to look a bit more positive now. Stick with the uptrend, buy into dips. Looks all right to me. Getting a little bit overbought short term, so maybe another small sell-off, but longer term, we've got a little double bottom there as well, so it's all quite positive really. So saw a sell-off, nice little double bottom, we've rallied out. If we can hold above 184.00, 185.16 looks like a reasonable target. We'll probably struggle there. We are already getting a little bit overbought, so we might see a little bit back. Can't really say anything else. Mr. Old Trade was listening to you. Oh, blimey, okay, that is one of my clients from my group. Sorry, Naz. Okay, email address is there. Please do have a look at my website. There. Please do contact me if you want to come and join us for some live trading. I promise you it's very good. Oh, there we go. Look. Thank you very much. I do appreciate that comment at the bottom there. Follow my Twitter. You can see all the positive comments from everyone who does work with me during the day. And it does go very well. Do email me or contact me through the website for any questions. Thanks all. James Gregory. Yeah, thanks, James. Yeah, he's someone who we chat regularly during the day. Quick look at Dax and S&P. I will until they cut me off. Dala, you're a client of mine as well. Thank you. You're subscribed to the reports. So let me just quickly try and show you. Right. I am quite concerned about DAX and Eurostox. Now look, this is the 4-hour chart. We've just been making new highs in DAX, and you will know if you get my DAX reports. I think that I was really concerned about these gaps. We just kept gapping higher. It just didn't look right to me, and I did warn, be careful. We're going to see a spike higher and then a big pullback, and guess what? We got it within 2 days of my warning. Now that is troubling. That massive red candle at the top of this channel is a worry. I just can't help thinking to myself that we've just gone too fast in these stock markets. We can recover a little bit now. You know, you could even retest 96.42, but I would be really careful up there, and I would suggest that we could double top there. Now, I'm not saying massively bearish. What I am saying is we could see a decent correction in stocks. Not right now. Let's see if we retest that high. 96, 80, 70 was really good support. I had that all over my reports. It's worked really, really well. It's just a fib level. It's nothing clever. But I did expect to see a bounce off there. We have got that bounce. How far up we go, I really don't know. In fact, today I've got my guys looking to get short around the 95.40 level. If we get that high, it doesn't look like we can get anywhere near there today. But you never know. We're not that far away, 50 points. That's what we're doing in our live trading group on the Dax. If we get through there, then we could double top. Oh, I've got to go. Okay. Thanks very much, everyone. Please do contact me if I can help you at all in any way. Next webinar's in a couple of weeks, but I do videos like this for our trading group and everything, so it really is worthwhile. Thanks very much. Bye bye.